lesson will go through our LO2 learning outcome 2. During our last lesson, we discussed about investment appraisal. So any question regarding last lesson, please, if you want to ask.
No problem, sir. It's okay. I understand.
So we had a last lesson, we discussed about NPV, net present value. We discussed about payback period. We discussed about ARR. We discussed about IAR. We had a discussion about weighted average cost of capital, and we mentioned DVM is a dividend value and dividend growth model as well. So that all was during our last lesson. Today lesson will go through our LO2 learning outcome 2, and we'll discuss and go through our LO2. Hope you all have access, okay, those are listening this recording, please, you can drop me email if you have any question, annumat@university.co.uk, and I'll try my best to get back to you as soon as possible. So we'll start our lesson, and if you have any question during delivery, please, you can stop me, you can ask, and we can go through things accordingly. Okay, we'll start. Okay, welcome everyone. We'll start. So our LO2 is learning outcome to be able to prepare the budget for organization, and we can look around the causes of the cost and the sales variance. So that will be in our discussion. We're doing financial management and control. And we'll start. Okay, so key objective, we had a discussion, sensitivity analysis, fixed budget, activity-based budgeting, zero-based budgeting, and using costing and sale variance, and propose, appropriate, improvement plan to address the issues and reconcile the actual contribution of the profit budgeted contribution. So that all will be in our discussion. So 2.1, prepare the sensitivity analysis and flexible budget. The budget need to be, what is the budget? Budget is the financial plan for future, where we are, where we want to see ourselves in future. That's all about the budget. Okay, so when we prepare the budget, so please always need to be look around the standard. It need to be accordingly, because the environment carry on changing, standard can be outdated, and ideal standard is need ideal situation, like there is a no variations, should be allowed variation, so we can stay within. So how sensitive some project can be there, the budget can be hugely impacted due to the number of factors like environmental, inflation, costing and all. So we'll discuss about the budget. Budget is the key aspect of the management accounting, and which we can look around planning, control, and performance management. A budget is the quantitative plan for the previous year. We can be looking in numbers, yes, financial term for the year. Budget contribute the performance, the management, and we providing the benchmark against the compare actual result and develop the corrective action. So when we have a variance, we need to be look around the why we have these. So budgeting, if you want to be keen, the learning more in detail in the variance, I can give you the booklet and we can go through a lot of variances. That's it's a huge variance section is very popular in the management and the financial management accounting. So budgeting provide the basis for the detailed sales budget. So please, any budget you want to make, it's based on the sale budget first. What's the sale? If you're expecting the sale will go up, your all other budget need to be adjusted accordingly. Like, the production budget, like purchase budget, like labor budget, like cash budget. So these are all based on the sale budget. Stock plan, production plan, cash investment, borrowing, everything is based on capital expenditure. Capital expenditures mean there are two types of expense, capital and revenue. Capital expenditure mean like you spending money on buying asset extension of the property. These are all capital which we can capitalize and you can show in the balance sheet. So those are your assets technically. Okay, financial budget. The function of the budget which we can look around the planning is one of. Plan is where you are, where you want to. Plan is a set map, provide the future direction. Control. You plan things but not control. Control is a corrective action. Is very crucial. Communication, of course, you have to communicate. It need to be effectively delivered. What we doing, what we have budget, how we can achieve within. Because the other way, the budget is a responsibility accounting. Coordination is very important. Coordinate with all the stakeholders to achieve the desired goal of the budget. So evaluation may be used to evaluate the action of the managers within the business term, cost and revenue. We can look around what cost, what revenue we generate. Motivation, budget helps you to motivate people. If we stay within the budget, if the people stay within the budget, they should be rewarded, Of course, they save the money. Authorization, budget need to be managers authorized, hiring staff, buying things. So delegation, budget can be delegated to by motivate staff, management involved, and also results need to be realistic, time bound, smart objective of the budget. Okay, types of budget. Operating budget. So revenue and associated expenses day to day is operation. Operation is so we can make the budget. Yes, we can categorize revenue, salaries, benefit, and non-salaries expense. Capital budget is the purchase of the large value of the asset, which we said capital expenditures, like buying assets, plant, machinery, equipment. These are non-current assets. In other words, we can say, the non is the control that will help, to control the risk, because that's a high value item. So normally it's good to be, you have a clear planning in place. So cash budget, cash is the inflow and outflow. Cash forecast, a lot of businesses are struggling. So you have to be shorter receivable days, longer the payable days. If you're buying the asset or you need plant machinery, think about, you lease it, you buy it, buy to let, or whichever scheme you want to go. End of the day, look the impact on the cash, So because the cash.
Hello, sir.
Yes.
Actually, I think this is for the financial and management control, LO2. But
Okay. Sorry.
my course is financial management,
Okay, just one second.
L2.
No problem, we can relate. Just 1 second, maybe you wrong. Okay, just give me one.
Financial management, yes.
Sorry. Maybe I'm thinking wrong. The financial management, sorry.
Yes,
Financial
yes.
Okay, sorry. God bless.
Yeah,
Thank
because sir, you are discuss about the budget is so deeply. I know the budget is so deeply, because here in our financial management there is budget is just for the one this only one word. They prepare the budget and variance report. So with the context of the third, this is the, I think, LO3.
Yes,
LO3.
Can you see now?
Yeah. This is actually in our my subject. Yeah, financial management in two.
Oh, no problem. That's fine. So we can relate. Sorry. So
Yeah, no problem. No problems. I think I'm also a little bit confused with one budget. Why is discussed too much? Yeah.
you're right. That's I'll stop and start.